大家好，今天给大家带来的这段访谈来自摩根士坦利中国区的首席策略师劳拉。她可以说是非常了解中国上市公司的基本面，非常了解海外资金动向的一线分析师。而在这段访谈里，她说了一句我认为非常关键，这是过去13到14个季度里面最差的财报季，没有之一。更扎心的是，他说中国企业已经连续13个季度集体低于预期，而且看不到改善的现象。不仅是现在难，未来1年也不乐观。他甚至给出了一个极其罕见的数据，明年中国名义 GDP 可能低于3，这是过去20年没见过的。为什么这么悲观？哪些行业还有机会？未来1年到底是绝望之后的希望，还是希望之后的失望？以及为什么大摩的闭门会议，中英文之间会有观点上相悖的地方？让我们来听听劳拉这位最懂海外机构视角的人，他是怎么说的，以及他的观点是否正确。
Get more with Laura Wang now. She's Chief China Equity Strategist at Morgan Stanley. And yeah, we've got a couple more earnings to go, but we're basically in the rearview mirror now for the third quarter. So in aggregate, you could probably say it hasn't been the best of seasons, do you think?
It has. It's basically one of the worst earnings quarter that we have ever seen over the last 13, 14 quarters. Frankly speaking, we've already been having 13 consecutive quarters of earnings misses from the Chinese equities in aggregate. And this quarter is not showing any signs of improvement. If we use MSCI China's universe as an example, actually close to 30% of all the constituent companies net have disappointed their investors on the earnings results.
How about in guidance? Anything stand out?
In terms of forward-looking guidance, I think investors are trying to look for positive signs, but what we are hearing from corporates is basically rather a gloomy picture, right, with what's going on the macro side, with what's going on with the deflation. So basically, if you look at where we stand for forecast for the entire year of 2024, we are forecasting 6% for this year, and we only have 1 month more to go. And the consensus is still sitting at 17%,
yes,
which we think is absolutely impossible. So what's going to happen is there will be very significant downward revision in the next couple of months as we hear more about the fourth quarter's results.
So downward revisions, then do you think we're sort of nearing the bottom of this, or it gets worse from here? Because then you're going to start to have base effects that also come into the figures.
I think it's unclear at this point because if you look into 2025, which we originally was hoping to be a year for the earnings growth bottoming out and the inflection point, but I think outlook at this point is becoming unclear because next year's GDP growth is being revised down as we speak. Our official forecast for 2025 for China's real GDP growth is 4%. And on top of that, we're expecting a close to 1% of deflation, which means the nominal growth would be just slightly above, barely above 3%. And that's the lowest nominal growth we've ever seen in the last 15 to 20 years, except for a very short dip at the beginning of the COVID period. So I think with that kind of a nominal growth, which is an environment most corporates have never really dealt with, what we should be expecting is even further slowdown of earnings growth. And if we can see some major policy pivot from the government side at some point next year, there could be a chance for that inflection point to take place. But otherwise, I'm not very positive at this moment.
That's on an index level. On a sector level, though, I would imagine there will always be opportunities, and you guys introduced this bull-bear earnings framework. Help us understand what the framework is, and then we'll talk about what the framework is giving out as far as signals.
Absolutely. We all understand China equity market from the index level hasn't been performing that well over the last several years. But what we have found through our analysis is that the market has indeed become a lot more alpha generating focused, which means the stocks that can deliver very strong earnings beat or upward earnings revisions indeed can outperform the rest of the market in a very significant way. So the earnings framework you were just referring to is something we recently introduced. We actually want to look at the entire market from a top-down level by sector and by industry, and then further at the stock level.
Okay.
And we want to look at the potential possibility of upward earnings revisions and the potential possibility of beating the consensus estimates for the sectors and for the single stocks. And also we want to look at the possibility of these companies revising up their dividend payout and actually do more shareholder enhancement activities such as share buybacks and such as paying out more dividends. So with that kind of approach, we would be more accurate, hopefully, identifying single stock and the sector industry level opportunities to create that alpha and outperform the market. That's what we are aiming at in this environment. Yes.
Which sectors in particular, and also how specific do you need to be? Because I kind of think through, for instance, the tech earnings we had, and they were mostly weaker, but then there were some, like JD, for instance, met estimates, a weaker outlook, but Xiaomi, for instance, outperformed with the EV. So how
Yes.
particular do you need to be?
With this framework, you can actually get as specific as you want to. At industry and sector level, what we have found is that sectors such as consumer services within consumer discretionary, pharmaceuticals, and media and entertainment, they really stand out. They are standing with the best chance of upward earnings revisions in the coming months and quarters. At the same time, on the valuation front, they are trading actually at below half standard deviation below their 5-year average of valuation. And then the sectors that actually stand out as being the worst positioned, those include the semiconductor sector as well as the property sector. They actually are showing the worst upward earnings revision outlook. At the same time, they are trading at 1 standard deviation above their 5-year average valuation. So those are not good choices, either from a valuation perspective or from an earnings revision outlook perspective.
Why aren't semis standing out to you? For a good reason. I mean, this is a sector that could benefit a lot from government investment, for instance.
That's correct. In China's environment, the semiconductor sector actually has a very strong correlation with the overall macro consumption environment because a lot of the products actually go into the consumer electronics and related categories. And if you look at what's going on in China right now, you can see the retail sales has been slowing down from a growth perspective, only trending at 2 to 3% year on year, which is very low. And the deflation is effectively suppressing consumers' spending patterns and activities. This is, I think, contributes a lot to the relatively gloomy outlook for the semiconductor from an earnings generation perspective.
Now, as far as how this is actionable, so I think we've established that earnings beats are a reliable indicator of future outperformance, let's put it that way. What is the time frame for that future performance, for example? Are we talking a month, 3 months? How do we determine tactical trades in this sort of with this framework?
Absolutely. So basically, with our analysis, it shows that on a 1 month basis, particularly after the earnings results are out, companies with earnings beats will deliver the best outperformance versus those actually missed the earnings estimates. And on average, they would deliver in aggregate 1 to 2 percentage point of alpha generation. So with 4 quarters in the year, in theory, cumulatively throughout the entire year, you would have achieved high single digit of alpha generation.
Okay, so we've established what the next month looks like. We'll talk more about the next year. Laura Wang will be rejoining us in a couple of minutes here to talk us through their 2025 outlook there. On your screens are some of the projections and targets out of Morgan Stanley, base case for 2025, and as you can see, some of the Chinese benchmarks are there. In fact, if you joined us, for some of our viewers that tune into our U.S. programming, Mike Wilson, of course, joined our colleagues in surveillance, of course, overnight to talk us through the U.S. equity component of the broader global component there. Hang Seng Index 19.2, target 19.4 in about 12 months from now. Laura Wang is still with us, Chief China Equity Strategist at Morgan Stanley. So what does next year look like? So we know what the endpoint is. What does the path to that endpoint look like currently?
I think what's likely to happen is that we will be facing a lot of front-loaded headwind. I think as we woke up this morning, we're already hearing some headlines about a potential tariff being imposed on Chinese imports into the United States, et cetera, et cetera. And this has been a widely discussed topic over the last several weeks already, right? So aside from the tariff debate, there will also likely to be some other non-tariff restrictions towards China. And the timing is likely to be very soon, very imminent in the coming weeks or in the next couple of months. However, if we think about what we would be expecting from the policy side domestically within China, we would be expecting the government to actually step up the fiscal easing to potentially support economic growth and try to fight against deflation. However, that's likely to come much later in the year in 2025. So unfortunately, we will be facing this timing mismatch of the front-loaded headwind versus the potential support from the fiscal side to try to rejuvenate demand and consumption and investment, but at a much later timing. So I think what the investors need to be aware is to buckle up and just be very prepared for the initial heightened volatility and then look for potential opportunities later.
So you're essentially expecting markets to go further down before sort of recovering, because the target prices aren't too different from where we stand today for most of the indexes there. Is that right? Is that what you're saying?
I think trend-wise, that's very likely to be the situation, because if you look at the price target towards the end of next year, as David just laid out, we effectively see very limited upside from where the market is trading now, right? But as I said at the beginning, the volatility is likely to be very high. China's equity risk premium is likely to be pushed up, which usually means that the valuation would be suppressed. And we just talked about the earnings outlook, particularly at the initial phase with the absence of meaningful fiscal policy step up. It's very difficult for investors to believe that there will be a earnings growth re-acceleration. So with earnings being revised down continuously, whereas the valuation being suppressed with a heightened equity risk premium, we should be expecting the overall market to take a dip or to experience very heightened volatility in the initial phase. But hopefully the policy support will come later, and then with a more stabilized environment, so that we can expect more relatively index level stabilization and also sector and stock level opportunities.
Laura, I still remember almost exactly what you said. I think you joined us right after that PBOC briefing. I think it was almost exactly 2 months ago. And I think what you said back then, and you mentioned multiples, right? I think we're going to fire the chart on PE, is that the reset to, I think, 10 on MSCI China, that was the reset. For us to get from 10 to 10.5 to even 11, we need inflation to come back, because that's the margin. Right?
Correct.
Do you see any path between the current level to the end of next year where inflation comes back, and hopefully we get this multiple bumping up a little bit even further?
I think you're exactly right, and we still maintain that view. If you look at where the market is trading right now, it's really just around 10 times, right? So I think the market is already trying to give credit to what the government has done so far, providing liquidity support for the Asia market directly, and the rate cut, triple R cut, and some of the other announcements they've made along the way. So the market is already giving a high enough valuation, 10 times, versus previously before the end of September, what we saw is somewhere between 8 to 9 times, right? So I think that credit is to basically value that the market is likely to be giving out higher dividends, and which can sustain that valuation at 10 times. But to go from 10 to 12 times or 11 times, that basically means that you need to redeliver the reflation. You need to put reflation back on the table. And the reason we don't have that 11 or 12 times 4P as our forecast for 2025 is because we cannot represent the government and say that pivot is really going to happen at some point
or
next
working.
year. We are hoping for that to take place, but I think we should just take this very carefully, and we should monitor the policy announcements very, very closely. And if there are initial signs of major step up of easing, then I think the government will be very clear about it, and the market will try to also reward the valuation to reflect that kind of action taking. But at this point, without such kind of a forecast or expectation, I think the market is very likely just to trade around the current 10 times forward PE.
What can we actually expect from the government, though? Is it something of an even greater magnitude than what we've seen so far?
At the moment, we've seen the swap program and the relending program from PBOC, and that's providing liquidity for the Asia market support, right? And then we have the relending program that's helping taking out some of the excess inventory from the property market, but total amount is not enough. It's only 500 billion RMB. But we think the actual amount of the excess inventory in property market needs another 3 to 4 trillion RMB to actually completely digest the inventory. And then, of course, we would like to see some other support to stimulate consumption from consumers directly. And I think some potentially effective measures could be subsidies for multi-child families, and some reforms or subsidies for the social welfare, social benefit distribution, etc. And those could actually be very effective in terms of, in the short term, stimulating the consumption behavior. But we're not yet hearing more news on these fronts.
I'm curious what you think, and who knows really what 3 years down the road looks like, but it seems everything that they've said so far and everything that they might say next year addresses or unlocks, addresses the structural pain points in the economy. And I'm wondering whether the 3-year outlook might substantially improve once we do see the current set of what the game plan is. And how do you look at the long term is what I'm trying to get to.
Yes, we definitely hope there will be a light at the end of the tunnel. And I always use the property market as an example, right? Because as we all understand and probably agree on this, property market, the slowdown of the property sales and the investment cycle has been a major drag on the economy. So even without any additional stimulus or measures from the government to take out excess inventory in the property market, the excess inventory should be able to clear itself up within the next 12 to 18 months. The reason for us to say this is because if you look at the current excess inventory in the market, total inventory is around 25, 26 months of sales.
Okay.
And you want that to drop below 15 months, which is the historical average, to be considered at a healthy level. This means you actually have another 12 to 13 months of excess inventory. So even without any additional measures, these 12 to 13 months of inventory should be gradually digested with another year of gradual sales of the primary house. And after that, usually you would wait for another at least 1 to 2 quarters before the investment cycle of property to finally start to pick up and reaccelerate. And then the drag on economy in terms of decrease of investment, decrease of sales, and job losses for all the relevant sectors, I think those impact will be gradually actually disappear. And then I think the situation will be much different versus what we are in at the moment.
There we go. The 18-month outlook. We covered 16 minutes, about 150 pages here of the Morgan Stanley, the free reports. Laura, thank you so much. Let's talk again. Fantastic insights there, Laura Wang.
看完这段访谈，我们来把他的观点整理成几个核心的结论，也就是我们作为投资者最关心的部分。第一个就是中国企业盈利差到出奇，而且短期看不到反转。劳拉讲得很直接，30%的上市公司让投资者失望，连续13个季度整体低于预期。今年原本预测增长17%，他认为不可能完成，明年恐怕还会继续下修。换句话说，不是市场情绪差，是盈利本身差。而中国股市靠的到底是什么？靠的不是利好，也不是嘴炮，而是企业真实赚钱能力回升。这点目前还没有看到。第二点就是给2025年做的一个总结。原本大家都把今年当作触底反弹年，但他给了一个非常悲观的数据，明年 GDP 4%叠加1%的通缩，名义 GDP 只剩3%出头，名义增长这么低，企业营收自然上不去，所以他才说没有重大政策转向，明年企业盈利还会继续往下走。那要什么才算重大政策？他点了几个关键词：更大规模的财政刺激，真正提高居民收入的措施，补贴多孩家庭，社会福利结构的改变，彻底解决房地产库存。现在只是做了冰山一角。第三个，不是所有行业都差，有几个方向正在逆势抬头。提到了一套牛熊框架，挑行业不是看情绪，而是看谁能上调盈利预期，谁有提高分红回购的能力，谁估值还在低位。结果他发现了3个板块最有机会，第一个是消费服务， 第二个是医药与生物科技，第三个是传媒与娱乐。因为这些行业有低估值，高概率上调盈利，分红有提升空间。它用词很明确，这是未来几个月最有可能出现超额收益的方向。相反的两个最差行业，半导体以及房地产，这两个行业还在估值高位，风险更大。短期市场啥走势？他说得很清楚，先苦后甜。明年上半年会非常难，美国可能加征新关税，非关税制裁可能接踵而来，海外资金会谨慎甚至流出，国内刺激要晚一点才会发力，所以他给的市场节奏是前期冲击大，波动剧烈，但后期可能迎来政策窗口。换句话说，明年大概率是 L 型震荡，不是 V 型反转。到底怎么走？第五，长期3年视角，反而可能出现真正的转折。他用了一个重要观点：房地产库存大约12到18个月自然消化。什么意思啊？如果房地产不再持续拖累，投资端不再塌陷，就业改善，产业链恢复生机，经济自然有底。也就是说，短期很难，但3年可能出现真正的周期反转。这部分非常关键，因为中国经济的深坑就是房地产。当这个坑填上之后，市场底部自然也出现了。所以总结来看，短期盈利差，政策未到位，外部环境更难；中期行业结构分化，能赚钱的公司仍能跑赢大盘；长期房地产拖累消失后，中国经济会迎来一个新起点。我想说的是中国股市未来的机会不再是整体行情，而是个股机会、行业机会、结构性机会。未来3年真正赚钱的是那种选对行业、抓住盈利上调、把握政策节奏的投资人。这期访谈其实给了我们一个很清晰的信息中国市场并不是没有机会，只是过去那种普涨时代已经结束。如果你觉得今天的而且最近有一个特别扎心的一个事情，一个数据就是中国2025年虽然整个 A 股的一个上涨幅度还是比较大，但是到目前为止，大股东减持已经到了4000亿的规模。说到目前为止，股市只涨到了现在是不到3900点，最高的是4000多点，但是大股东已经减持了4000亿了。这个数据表明这些上市公司的持有者们，他们好像对自己的公司不是那么有信心。如果连他们都对自己的公司没有信心，那这个就是一个非常尴尬的事情了。好了，本期视频就到这里，感谢大家收看。